Many of you have asked me about an update on Uber stock, and the stock has been crazy over the last few days. They reported earnings yesterday, and the stock went down 9%, 9.5% in just one day. I got so many comments. Please give us an update on Uber. So here it is. And strangely enough, the stock today is up around 6%. And I know a lot of you guys are confused, but this is how the market works. The market is not rational. If the market was rational, if the market always acted based on how I believe it should, or based on the fundamentals in the short term, then we wouldn't have buying opportunities. There would be no opportunities. We would all be index fund investors because there's no opportunities to buy. There's nothing to do. But the market is not efficient. The market is not always going to act the way you believe it should be acting. A lot of amazing companies, they report good earnings, they raise guidance, and the stock goes down. And in other times, really very bad companies, their stock goes up. But that's how it works. And the best example was Meta. When Meta went to $82, then it went to $710. And no matter what you believe about Meta, there was no fundamental justifications and no kind of rational expectations for the stock to deserve to go to $82 per share. But this is why opportunities exist. And that's why I love the stock market so much. But for Uber, I believe they did very well. You know, their 3-year outlook was mid to high teens CAGR. They grew 21% year on year in gross booking. Adjusted EBITDA was 30 to 40% in terms of CAGR, now 60% year on year. And free cash flow conversion is over 106%. Amazing stuff. For revenues, it's up 21% year on year, and revenue has been actually accelerating in terms of growth. It was 15, 16%. Now it's 20 to 21% year on year. So revenues has been accelerating in terms of growth. Adjusted EBITDA up 44% year on year. EBITDA margin, massive expansion from 3.4% to 4.2%. In terms of total monthly users, it was 171 million people that have used Uber this specific quarter. This is up more than 10 million people quarter on quarter. This is insane. 14% year on year. Just absolutely insane. Now you look at the delivery business. The delivery business is very promising, and it's also been accelerating in gross booking from 17%. It grew 18% this quarter. Amazing stuff. Revenue also accelerated to 20% growth from 4 to 9%. Now it's growing 20%. This is insane. Adjusted EBITDA margin from 2.8% to 3.6%. So everything has been getting better. And even the Uber One membership program, where we added 5 million members in the quarter, bringing our total member base to 30 million people, up nearly 60% year on year. Those are 30 million people subscribed to Uber One that they just love Uber and they're loyal to the brand, and they're going to use it every single month for Uber Eats, for everything else they have, rides or whatever. They love Uber, and over 30 million people are subscribed, 60% increase year on year. Now, in my opinion, there was 2 main reasons why the stock kind of went down. The first one was the gross booking guidance for Q1 of 2025. It was 17 to 21%, which a lot of the analysts, they believe, that means Uber is decelerating in growth, but none of that stuff is true. And this guidance includes a 5.5% currency headwind on year growth. So if it wasn't for that, it would have been 24, 25%. So the business of Uber is accelerating in growth. It's not decelerating. This is insane. But we had a massive rise in the US dollar, and the euro and other currencies, they got a little bit weak. So they're trying to factor it in their own guidance, because Uber is an international business. It's not just in the United States. And again, to me, it was an insane overreaction, and the market is correcting it today. Now, the second concern with Uber, which I believe is massively misunderstood, is Uber's position on autonomous vehicles. And Uber does have a lot of notable partners, including Waymo, WeRide, even Nvidia. Very recently, they're working on some kind of a software where they use Uber's data for them to create something for autonomous vehicles, because Uber has a lot of data, and it could be valuable for a company like Nvidia. And you have a lot of things going on. But again, the main concern is Tesla, and how profitable this is going to be for Uber. And I'm going to talk about that a little bit. Now, Uber has been putting up many more pictures on their earnings presentation about autonomous vehicles, and they're talking about it more because they know this is what the market cares about. And I believe and I did say they're ramping up in terms of investments in fleet managers and many different things to try to expand Uber's reach. within autonomous vehicles. And I believe this is over a $1 trillion opportunity in the United States alone for autonomous vehicles. Okay, but this is what I said about Uber. I said Uber is the Amazon of autonomous vehicles. Every single AV that's not listed on Uber will be missing out on 160 million plus monthly users and a network that's extremely hard to replicate. I predict that Teslas will have their own apps, but will also be listed on Uber, just like Waymo. And if you read this article from CNBC, it says Waymo's own ride-hailing app. But if you didn't know, Waymo is one of the leaders in commercializing autonomous vehicles. They're very active in California. They're expanding in Atlanta, Georgia, in Miami, Florida, and in Austin, Texas with Uber, exclusively on the Uber app. And this is what they said. Waymo's own ride-hailing app, Waymo One, will not be operational in Austin. Customers who open Waymo One will be redirected to Uber's app. And again, Waymo is not stupid. There's a reason why they're partnering with Uber. And this is the main reason why other companies will also partner with Uber. And I'm going to give them to you. The first reason is they get access to the Uber network, 171 million plus monthly users. We're going to be able to use the Waymos. It makes it much easier for those companies to scale in new cities. If they partner with Uber, they get Uber's reach other than just doing it on their own. So this is the first one. The second reason is, and this is the part that a lot of people are missing, is in terms of wait times. So the first thing is people don't want to have 20 or 30 or 40 different apps. They don't want to have a Tesla app, a Waymo app, Uber Eats app, Lyft app, and all these kind of apps. They love Uber, especially as Uber One member, 30 million people, and they use Uber for everything. Okay, and the main thing is that for wait times, with Waymo, they don't have enough vehicles to have very low wait times. Maybe they have that some places in California, and it's only in the major cities. It's not outside downtown or outside one of the major cities. But if they're trying to scale, if Waymo is trying to scale in terms of autonomous vehicles, they have to have enough vehicles to be able to reduce wait time. But they don't have that. So people, they don't want to wait 20, 30, 40 minutes for a Waymo. And because of that, if they are on the Uber app, they have the option to either choose a Waymo, or if they don't want to wait for Waymo, they can potentially choose another vehicle from Uber. And it just if normal drivers that's going to drive them to their appointment or whatever it is. So this is the second reason. But the third reason is the fleet management. So Waymo doesn't want to bother charging those cars, cleaning them, fixing them, maintaining them, handling lost and stolen items, handling certain claims, handling insurance stuff. They don't want to bother handling all that stuff. So they delegate it to Uber. And Uber owns and has stakes in many different fleet managers like Move in Miami, which is what Waymo is expanding with. This company is largely owned by Uber. And those companies, they will charge the Waymo vehicles, they will clean them, they will maintain them, they will take care of lost stolen items, they will take care of the transactions in and out, any kind of insurance stuff, any kind of refunds, everything will be handled within the Uber app. Okay. And the last thing that I believe in is just like, for example, Pizza Hut has their own app, but they're also on Uber for more reach. I believe Tesla will ultimately have the same thing. Maybe Tesla itself does not want to partner with Uber, but I believe the drivers themselves, they will likely list their car on Uber to get more business, to get more work, to get more reach, get access to the hundreds of millions of people that are using Uber every single day and mainly every single month. And that's what I believe in. And I believe I'm ultimately going to be right, that Uber is going to be the Amazon of autonomous vehicles. All those autonomous vehicles, all those flying taxis, whatever they are, most of them are going to be on the Uber app, and Uber is going to handle all that stuff for them. That's how it's looking for so far, and I believe it's going to continue. Okay. And it's not going to happen before a few years out, and the CEO talked about it. But for the valuation, it's now trading around 18.7 times free cash flow. This is dirt cheap for the company, dirt cheap for the network's effect that's happening, for the growth that's happening. It's growing free cash flow 20-25% plus, gross booking growing 24-25% plus, adjusted EBITDA massive expansion 40-50% year on year. 18 times cash flow is dirt cheap for this company. And earnings per share are expected to massively ramp up as Uber is expanding margins, and they're starting to buy back stock not for the first time, but in a major way this year in 2025. Expected to grow 36%, 22%, 26%. So it's 20 plus earnings and free cash flow growth. You're paying now around 21 times earnings or 18.7 times cash flow. And if earnings per share continues to grow 20% plus for the next 3 to 5 years, which I believe they will, I would expect Uber stock's returns to mirror earnings per share growth over the long term of around 20% per year. So that's what I'm expecting for the company, and it's one of the best opportunities in the market, and I'm not sure for how long that's gonna last. But for me, it's good. As the longer it continues, the better the fundamentals get, the more Uber will buy back stock, and the more time I have to buy shares of Uber, dollar cost average in the company, and hold a larger stake for the long term. And this is just how I think about Uber, not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.